Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Joining us is Caroline Hyde, co-host of Bloomberg Technology here in studio. Caroline, let's first start with Intel. Felt like this was expected, and yet it feels like still a big deal for Intel.
Well, I will say every time we had Ian on in the last 2 years, Ian King, we basically ask him, Caroline, how much patience does the board have for this turnaround plan? And I guess we finally learned today they're out of patience.
They were out of patience, and actually saw that patience being strained in August when they had their numbers. The earnings were poor. In particular, they were showing losses at the manufacturing part of the business, the foundries part of the business. And Ian King, poor guy, I think he's meant to be taking the day off and had to come running back to report how
we've been monitoring. We're like, he's on the terminal.
Yeah, and when that August number hit, we saw, in particular, one member of the board quit, Lib Bhutan. And with the frustration about the direction of travel coming from Pat Gelsinger, because look, this predates Pat coming in 2021.
To be fair, right?
To be fair, NVIDIA has been on AI accelerator path and GPU focus for a long time, but they just managed to miss this AI accelerator wave. The Gaudi offering that they have is likely to not meet their own internal $500 million per year revenue target. Compare that to the $100 billion that NVIDIA is bringing in, the more than $5 billion that AMD is managing to do. All of this, though, just shows that since Pat Gelsinger has been the leader in 2021, Intel's share price has plummeted 60%. NVIDIA's share price has rallied more than 800%. And Intel has managed to try and pivot, become more focusing on foundries, do like the opposite of AMD, which spun off Global Foundries and went fabless. Intel went back in. But there's a mixed reaction coming from the analysts today, because Citigroup is actually saying, and maybe this is why the shares have turned negative, we're now off by 1.7%, is that, look, Pat was the best guy for manufacturing. They just got rid of the foundries part of the business and kept Pat, rather than get rid of Pat and try and still cobble together the focus that he had in terms of getting into building chips as well for other clients as well as themselves.
I mean, it's amazing, right? Because Intel was up 6% at its highs, as you said, now down about 1.5%. So it just shows like Wall Street trying to figure out what this means. I mean, is it a Pat Gelsinger problem? Is it an Intel problem? Like, what is the way forward for Intel?
I think it's an Intel problem, many would say, is that over years, they were trying to do the biggest restructuring in 4 decades. Pat did come on with a very big, bold vision. Perhaps that was too big, too bold, too costly, even with government help, with all these CHIPS Act money coming at them to be able to build in Ohio, Arizona. They had to suddenly put on ice what was happening in Europe. And ultimately, the market ripped away from them, particularly when it came to AI. And I think just other areas of the market, plus their own clients. Like, remember, at the same time as NVIDIA building up strength in AI, Apple is busy making its own chips, and they're not making so much for their phones anymore.
If this wasn't a Pat Gelsinger problem, and he did have a few years to attempt to turn it around, you mentioned what happened with the share price, especially versus NVIDIA, then what can another leader actually come in and do to save this company?
And particularly at the moment where they're depending on insiders. Look, fair play, David Zinsner, the CFO's only been there a few years, but Michelle Johnson-Holthaus, MJ is known, has been there for 3 decades. This is totally turning to people who understand the business but are not going to be a breath of fresh air anytime soon. Of course, we've got Frank Yeary saying he's going to take on the executive chair role and he's going to find a new permanent solution. Will that be from outside the business? Or will they turn to potentially starting to break themselves up? That was something Pat was very dead set against. Yes, he was going to be making money by spinning off different bits of the business, certainly particular investments that they'd made, but he wanted to keep it intact. What about offers coming from rival suitors?
Right. I mean, Qualcomm was interested, right?
Yeah, and then they went off.
And then they're
the
not
deal.
So,
but
not so into you anymore, kind of thing. Well, what kind of leader do we have any idea? I'm just curious what kind of leader Intel needs at this point. Like, I love the inside outside, right? We've seen this with these incredibly legacy companies.
It's almost like you're talking about Boeing right now.
Yeah, exactly.
I'm hearing this and I'm like just thinking about Boeing.
Right. How many times have we talked about this story that maybe it's time for fresh blood to come into a company?
And remember, Pat Gelsinger himself was kind of fresh blood because he came out from VMware. He'd been the CEO there. He'd left Intel. He was so integral to Intel in the 80s. He was like literally, designing the chips himself. He then left after serving a long time in a period as CTO as Intel to then go and get other experience. Yeah. Then he came back and he couldn't change it around. If they go outside of, say, MJ, it's interesting hearing the narrative just from the statement this morning. They're saying we need the product people to lead the business at the moment. Well, that is MJ. So what are they going to do? Are they going to bring other product expertise from outside, or are they going to bring someone who can be a bit of a turnaround king or queen? We'll have to see.
Right, like operator, turnaround person versus somebody who really understands the products that need to kind of move Intel going forward.
To what extent does this turn into or continue a nasty cycle for Intel? If you're a potential customer or a customer and you're thinking to yourself, well, do I really want to buy it from a company that I see reported in the press such as this? It's going through this upheaval. There's, again, executive shakeup at the top. Does that turn into a terrible doom loop for the company?
I mean, time will tell, and I hate that sort of an answer. But what could help is the PC refresh. This is a man who's also staked his future on the AI PC taking off. And thus far, we've all talked about it, but not really known how it's going to affect our lives and not really bought the darn thing.
Right.
So will we actually see, I mean, this echoes the issue that Dell was having and HP was having in the beginning of the week.
Yeah, we talked about it Kujan last week.
Right. Yeah.
And he made the point that there are no apps for Intel, there are no apps for AI PCs yet. So it's like we just hear from executives talking about them, but there's nothing to show for them.
And so if that starts to tick up, if suddenly we are all addicted to generative AI, we do suddenly want to get a newer PC that we had bought just in time in COVID, and then we want to now get a new one, maybe that will help Intel. But then they're going to be leaning back into the PC side rather than trying to compete on the AI accelerator side, which is really the bit of the market that at the moment everyone's getting into.
Yeah, it's kind of like this identity crisis for a name that was just so, associated with anything to do with the semi world. Hey, before you go, we got to ask you about Supermicro Computer. I think it's the number one gainer in both the S&P 500 and the NASDAQ 100. Independent review, no evidence of misconduct. This is a company that's had so many twists and turns this year.
Oh, I mean, on the highs, absolutely caught up in the AI hype because they are a competitor with Dell. They basically put NVIDIA chips within their servers and sell them out to clients. So Supermicro done phenomenally well. But then came the concern about, well, no one wanting to audit them, then getting worried about financials, not putting their 10K out, potentially being kicked off the NASDAQ.
Right.
Now they've got a new auditor. Now they've got a new CFO, chief compliance officer, general counsel. They're trying to steady people's nerves that, look, we've got different oversight here of the business, and we are going to be able to stay listed within the NASDAQ, which I think for many is the key.
I'm surprised to see the reaction today, just because when EY resigns, it's not a good sign. No. And I'm like, well, did they get something wrong then? And this new auditor's different in some sense? Like, they're obviously sending a different signal, but someone's not in the right here.
Or whether EY were frustrated with the leadership and now they're changing up the executive leadership and showing that they're going to have a different governance structure going through. But everyone wants to love this stock because it is so integral to the AI hype cycle. So maybe it's just been so beaten up that people are willing to buy back in. But yeah, we'll see what BDO USA has to say about the numbers when they eventually file them.
Not one of the big accounting firms that typically audit S&P 500 companies.
But I know BDO. Like BDO are significant, and you're not going to hang your hat on. I would have thought, they're taking a big risk here, and I'm sure they want to show the proof in the pudding.
Yeah. Well, I've got to say, investors certainly buying in. Stocks up 28% so far in today's session. Caroline, thank you.
Thank you.
So appreciate it. Co-host of Bloomberg Technology. Catch her on Bloomberg Television at 11 a.m. Wall Street time every day.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Hezbollah has claimed the first strike against Israel since a U.S.-backed ceasefire plan came into effect. That was less than a week ago. It prompted Israeli officials to vow a strong response in the most serious threat so far to the truce with Lebanon. With more on what we know, Bloomberg News U.S. National Security Team Leader Nick Wadhams joins us from our D.C. bureau. Nick, I was confused to see this headline because, we see in the story here, less than a week ago, we saw a ceasefire agreement between these two countries. What happened?
Right. Well, I mean, that's really the issue, and this is something that happens every time there is a ceasefire, or frequently when there is a ceasefire, there are violations of it. And the question is then, at what point do you say, okay, the ceasefire has essentially collapsed and no longer applies? What we gather so far is that we have not drifted into that territory. The U.S. National Security Council spokesman John Kirby said today that rocket attacks went from hundreds to basically zero, and then dozens of airstrikes by Israel to 1 or 2 per day. So what they're saying here is there has been a dramatic reduction in violence, and that's what matters, and the ceasefire still holds. But what it does tell us more broadly is that this is very tenuous. You had President Biden come out and say that the ceasefire had been achieved, a lot of concern about whether it will hold, and concern that things will only continue to escalate. One possibility, of course, is this is just sort of a show of strength by the two sides. Things will quiet back down, but certainly not looking good for the broader prospects for that ceasefire at the moment.
Nick, why this dance? Rather than ceasefire means ceasefire. So help me understand. I know that it's always complicated when I feel like anything in the Middle East, but why this dance rather than, okay, ceasefire, this is a step forward?
Well, I mean, it's a great question, but the big issue is that so much time and effort and energy went into establishing this ceasefire, and the really important thing for certainly the U.S., but also for those caught in the conflict, is that the violence has dramatically reduced. So there's a question of, okay, you have the ceasefire, you don't want to immediately just declare the ceasefire is dead, which means, okay, that everybody would then have to go back to the negotiating table. And if you're looking at a pure numbers game, it's like, okay, well, we have a monitoring system in place. There may be some violations. We do not deem those violations to indicate that the ceasefire has totally collapsed. I mean, and when you look at some of the language, it seems like the two sides also have an interest in keeping the ceasefire in place. Hezbollah, for example, targeted Israel in a specific area, an area that's still contested, and they framed their response as a defensive response to what they said were recurrent violations by the Israeli side. So what they're saying is this is much more of a defensive action, and they have not gone back on the offensive. Of course, big question is whether Israel will see things the same way. But at this point, the big question is going to be, is there escalation where we would get to a point where we would say, listen, the ceasefire exists in name only? So far, that's not quite yet the case.
Well, tell us a little bit more about the area that's in contention right now, Nick, because we saw after that ceasefire deal was signed last week, or reached last week, I should say, we saw people moving in Lebanon, moving back to that area because they thought it would be safe to do so. So there's some concerns there.
Yeah. Yeah, I mean, so I think a lot of the imagery we really saw of people coming back to their homes in Lebanon, in a lot of cases, that was actually in Beirut, in the capital, where people had fled because Israeli airstrikes had really hit some parts of Beirut, particularly southern Beirut, quite hard. And so people were coming back in because there was a feeling, which has largely held, that the ceasefire would apply and you wouldn't start to see those strikes again. The area really in question is this sort of strip of land around just south of the Litani River. And so this divides Lebanon and Israel. And this has been a sort of hotly contested area for quite some time. And it's believed that Hezbollah, has been there for a long time. And there was a feeling that Israel could then pull back, and that would also allow Hezbollah to pull back. So that's really where you're seeing a lot of the contested, the violations. We have not seen major violations apply, to Beirut, which I think if you did see that would indicate a real collapse of the ceasefire.
What are we hearing out of our own security operations, our own intelligence, out of the White House in regards to that, or we haven't heard maybe much of anything yet?
Well, I mean, the big thing is, the U.S. put, as I mentioned, a lot of time and effort and, frankly, credibility into getting this ceasefire. So it is very much in their interest to try to keep this thing from escalating much farther and keep it in place. This is something that President Biden really wants to keep in place through the end of his term, in hopes that then it would put pressure on Hamas and Israel to come to a ceasefire in the Gaza Strip. So it is very much in their interest to keep this thing going. They do not want want this to fail. So what you can expect to see in the next couple of days is going to be a ton of pressure on both Israel and Hezbollah by the U.S. and other mediators involved in this action to really tamp things down and not let these tit-for-tat strikes get any worse.
Tim and I are going back and forth because we're like, there's one more thing we need to ask you. And I feel like when you think about pressure, I think about Tim, the president-elect.
Yeah, well, Donald Trump posting just at the same time we learned that Israel is actually doing this. He posted about the Middle East hostages on Truth Social. He said there will be all hell to pay if the hostages are not released by January 20th. And he called on the hostages to be released in the Middle East right now. How does this complicate things or not complicate things?
Well, I mean, it's very interesting because the hostage situation applies to a different situation, which is in the Gaza Strip. And so that is it that different?
Well, it's a several front war.
Sure, that's true. Though the issue there is that a threat like that would not necessarily apply to Hezbollah because they don't have any hostages, though they have worked in support of Hamas. But I mean, you're right in the sense that when President-elect Trump issues a threat like that, it certainly causes people to stand up and take notice and question, okay, what's going to be coming down the pike? It's that sort of this idea they have, escalate to de-escalate. The question is this bluster, or is this just something that he's going to actually take seriously and potentially launch some sort of strike once he becomes president?
All right. Well, as we said, it's kind of a 2 steps forward, 1 step back. It always feels like, but a lot of moving pieces to this. Nick, you're a gem. Thank you so much. Nick Wadhams, Bloomberg News U.S. National Security Team Leader, and you can read the latest. Just check it out at Bloomberg.com or, of course, on the Bloomberg Terminal.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, not sure exactly how to set up this story from our Bloomberg Businessweek team, other than it is an incredible deep dive by Bloomberg's Jackie Davalos and Sophie Alexander. It's about someone who probably is about to become maybe a household name, and not for a good reason. It's a former billionaire, now disgraced tycoon. His name is Greg Lindberg. He built a network of egg donors and surrogates and is now facing as many as 30 years in prison. There's some legal different charges. There's a lot to unpack here. So let's get to it. Bloomberg News technology reporter Jackie Davalos joining us from our Washington, D.C. bureau. Jackie, every time I turned around with Tim, he was reading the story and he's like, leave me alone, because it was just unbelievable. I do feel like we're watching a little bit of a streaming series, reading your story. Who is Greg Lindberg? How did he and this story get on yours and Sophie Alexander's radar?
Well, he might actually be a well-known quantity if you've been a Bloomberg reader and listener over the last couple years. He made his name in the insurance business, and not really for a good reason. He built his wealth by amassing this empire of insurance companies that then got him in trouble. He was convicted of bribery and some fraud charges. He actually went to jail a couple years ago for the bribery charges. He wanted to basically get some preferential treatment in North Carolina, where some of his companies were based. He got caught for it by the FBI and went away for a couple years in prison, but got out on kind of this procedural issue with the jury instruction. So basically, he was able to kind of, come out as a free man. All the while this was happening, and even before he went to jail, he had these aspirations of having upwards of 50 children. And what he is known for kind of in the business community really had nothing to do with what he was doing in his personal life, but what we were able to uncover, Sophie and I, she is a reporter that knows billionaires, knows how they think. And I really knew kind of the fertility clinic side of things. I had done some reporting on a company called Kindbody last year, and this came on our radar as a kind of a combination of those two reporting threads. But we had no idea just how deep his baby project really went.
Well, that IVF firm that you mentioned is one of the two that's implicated in this scheme. Let's back up for a second. We're going to get to sort of the intricacies here, but why would he want 50 kids? And why would he want to do this through IVF? Because there's some custody issues here that you detail in the story.
That's right. He has 3 children with an ex-wife that he had, when he was married. And there was kind of an ugly custody battle there. And when we sat down with him to interview him, he was fairly forthcoming about the reasons why. He kind of vacillated between, well, I don't really want to lose kids in a custody battle, which is why I wanted to have them on my own. He wasn't, hiding the fact that he used a network of egg donors. But then again, he wasn't totally forthcoming about how many were involved. Another reason he stated was that he wanted to preserve civilization, this responsibility to populate the earth. And we recognized a lot of those threads from, especially Sophie Alexander's reporting on Elon Musk and other billionaires who are kind of obsessed with this kind of pro-natalist way of thinking. And Greg Lindberg's goals really echoed that goal as well. And, the other thing that kind of came up is that, I don't think a lot is known about what it takes to build a family in this way. We typically think of like a couple walking into a fertility clinic that can't conceive, not necessarily a guy who's basically trying to have as many children as possible on his own. And yeah, there's the issue of custody. He shares some children with this woman who kind of served as a recruiter for him, but she's not allowed back in the United States. So 8 children are currently in his care in Tampa while he's sitting in jail waiting to be sentenced for these larger crimes. And that's really what's at the core of the story is, where will these children end up? What happens to them? And ultimately, did doctors know that this was a possibility?
I don't even know where to begin. It's just kind of, as I like to say, a wait, what moment. I want to go back to, you talked with Lindberg earlier this year. Tell us about that conversation, what you wanted to know, why he agreed to do the interview. What was, I'm just curious how you got him to talk to you.
Well, he has a pretty open presence online. If you Google greglindberg.com, he talks a lot about longevity. After his legal saga, he's currently waiting to be sentenced, but at the time, over in the spring, he was posting YouTube videos about kind of his new project, which is all about wellness and how to get younger and stay young. And, he posts a lot about these things, and we were interested in that. I had gotten a tip about kind of his baby project separately, but it really seemed like these two things were linked. And so he wanted to talk about his longevity company called Longevity Labs, and had a phone call with him. Then he invited us down to Tampa, where he lives. And this is where we really got to see him in his element. He came in with security guards. He, has this kind of very intimidating quality to him. His eye contact was extremely intense. And at first he was fairly open about how he built his family through IVF, but started to kind of clam up a little bit once he almost like heard himself kind of talking about the unorthodox nature of it. And we were pretty forthcoming that like, hey, this sounds a lot like this other guy that we've written about, Elon Musk. But that's kind of what got I think it cracked it open for us that this was real, and that there were certainly a lot of women that, he didn't want to talk about, but we had to kind of piece those pieces together, because it's an incredibly important part of the story, which is the exploitation involved. And while this might have been, a goal of his, there were women whose lives were impacted by how he carried this out.
So let's talk a little bit about that, how he carried this out, who was involved, how Instagram was used, and what women who ultimately did donate their eggs to Lindberg were told versus what they ended up getting and what he ended up doing.
In the first stage of the baby project, Greg Lindberg really targeted blonde, blue-eyed, green-eyed model types. There were matchmaking services that he used. There were kind of boozy, parties that he threw on his huge yacht. There were, reality TV stars, Netflix stars. I mean, very, very like a specific type of woman that he had in mind. He had this kind of obsession with Aryan looks and the German quality to things. He himself obviously has red hair, but he really wanted to have, blonde, blue-eyed boys, and was super specific. And for some of these women, many were vulnerable. There was one who was not, from American. There were several actually who were Eastern European, vulnerable in many ways because, they didn't know what they were getting themselves into. He promised them money, promises that they would be in the child's life, that they will build a home together, and was kind of manipulating them in a way that, if they didn't go through with this procedure, that he would cut them off basically and cut the relationship off. There were other women that had no idea that, who he was. His recruiter slash fiance, she was going on Instagram and basically finding these women and offering them hundreds of thousands of dollars to donate their eggs. And they thought, wow, my eggs are just going to go to this, nice family who can't have kids. And they weren't told the truth about Greg Lindberg, his legal troubles, and the fact that he was sitting in jail while some of this was happening.
Jackie, your story is definitely about Lindberg and everything that kind of happened around him. But it's also about, as you guys, so well write, the booming $10 billion fertility industry here in America. And you guys have been writing a lot about this industry. It continues to grow. There's demand out there. We know that. Tim and I talk about it a lot on air. It also shows, though, ultimately the lack of transparency over it and kind of rules governing it. Is that kind of the other side of the story? Because I think we're listening and saying, okay, some of this happens. Like, tell us kind of where this breaks down, where the law's been broken potentially.
This is the big picture. Greg Lindberg might go to prison, likely will, but anyone else can pull this off because a lot of this was actually legal. There is very little regulation when it comes to the fertility industry. It's this honor system. They're a self-regulated industry, essentially, that, has guidelines that doctors purport to follow. Clinics say, these are the guidelines that the American Society of Reproductive Medicine, ASRM, it's a trade group that represents doctors across the country. And they say that we follow these guidelines, but no one's following up on it. No one's policing it. The government has largely stayed out of regulating fertility because it's really politically fraught. As we know with reproductive rights, just kind of at the core of this debate. And, fertility is usually thought of as like a way that, it's like a miracle, for couples that haven't been able to have children. But as our story shows, depending on what your intentions are and how wealthy you are, it can also be used as a tool for exploitation. And two of the clinics are really well known. Kindbody acquired this other Chicago clinic that started it, but it also continued after they acquired them. HRC, it's a major fertility network on the West Coast. A doctor who's treated celebrities was the one that Lindberg preferred. And he was open about this. And we were able to kind of piece together some of the concerns that clinic workers actually had, specifically at Kindbody, with what they were doing. And, that takes a lot of courage for people who kind of see this, playing out. And I think what our story does is, at the end of the day, these guidelines are there for a reason, but, no one's really following up to see if doctors and clinics are actually following them.
Hey, Jackie, quickly, and then I'm going to just encourage everyone once again to go and read this story. It's the most read on the terminal today for a reason. I could not put it down. He participated with you to a certain extent, but then cut off communication with you and the reporting team behind this. And then what happened?
And there's still an ongoing claim of defamation. He alleged that we were interfering with a relationship with one of his surrogates. Obviously it's a touchy situation for him, and we were pretty forthcoming about the direction of the story once we really cleared up the facts. But right now he's sitting in a county jail in North Carolina awaiting to be sentenced. He was denied bail multiple times this last month. And we're not really sure where his story will end up. But, we stand by our reporting and, hope that folks out there can read it.
It's an amazing read. Unbelievable. Jackie, thank you so much. I'm really glad we were able to go through it with you. Jackie Davalos, she's Bloomberg News technology reporter. This story by she and Sophie Alexander of Bloomberg News. Check it out at Bloomberg.com and also on the Bloomberg terminal. Jackie, thanks.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, some news out of China. The U.S. is unveiling these new restrictions on China's access to vital components for chips and AI. It escalates this campaign to contain Beijing's tech ambitions, but it stops short of earlier proposals that would have sanctioned more key Chinese firms.
All right. So curious about all of this and what our next guest has to say. He's Ben Harburg. He thinks a lot about this region and the latest when it comes to investing in China. Ben is founder and portfolio manager at Core Values Alpha. His team, by the way, manages the CVA Great China Growth ETF, ticker is CGRO. This year, up just shy of 10.5%. It is down 20%, though, since October 7th. Ben joining us from Riyadh. You're always somewhere. It's the wee hours.
So you're either staying up late or getting up super early for us.
What is it? Are you just
Wait, what's going on in Riyadh?
Are you looking? Yeah, exactly.
Are you on vacation?
Is
this a work trip? What's going on?
I'm speaking at the World Football Summit here.
Why?
Oh, that's pretty cool.
I own a soccer team in Spain, so I talk a lot about. So my side hustle is running soccer teams.
How much time do you spend doing that versus managing the fund? I mean, can you do both? Obviously,
you can do both if you delegate well. I probably spend 5% of my time on football related.
How much do you want to spend on soccer?
Oh. If trying to turn the corner, then I'll be all in on that. But no, I would love to spend more time. We'll slowly edge towards that as my net worth creeps higher, I guess.
So Ben, is it easier to attract investors to invest in a sports team or soccer team than it is to get investors to invest in China? I ask you this, and I know we talk about this a lot. I mean, your fund is about $7.3 million in assets under management. So I'm assuming you would like for it to be a lot more. So help me around here.
We have over $2 billion on the private side. So okay. This is, this public strategy is newer for us, and it's a bit of a trial balloon, and we'll be adding new products into it shortly in the next couple months. So it's kind of a process of seeing what sticks to the wall on the ETF side, but we've obviously done well on the private side. I'd say today it's probably easier to get people to invest in sports. Sports are hot right now, European football particularly, because the valuations are so low relative to their US peers. It's a highly inefficient industry, and it's also one that's really fun to get involved with. And so You've seen some mega funds raised over the last few years in this space. In
terms of the private investors, as you said, over, I think, $2 billion, you said, is it the similar investment strategy in terms of what you're trying to do? This fund in particular, you look for those kind of tech-enabled companies in Greater China, the mainland, Taiwan, Hong Kong. Is it the same type of investing, or is it something different that you're doing on the private side?
It's obviously much earlier stage. So it's venture and growth investments. So companies that are maybe, Series Seed, Series A, and then some pre-IPO stuff. And then obviously ETF is all public. Okay,
so let's talk a little bit about, now that we've sort of established the grounding stuff here, let's talk a little bit about opportunities that you see, because we actually haven't had a chance to speak to you since I don't want to call it re-election, but since President-elect Donald Trump won back earlier last month. How does that change the outlook for China? Because on one hand, he talks incredibly tough about China. He implemented tariffs that then the Biden administration kept. And he's talked about increasing tariffs on China when he takes office. How are you thinking about all this?
I think you should be short-term bearish and long-term, optimistically or cautiously bullish, let's say. And I think that's because you're going to hear a lot of headlines and you're going to see a lot of news about very high tariff numbers. and a whole slew of China hawks brought into the administration. And so I think that'll mean really tough dealing and a very high bar set for the Chinese that they're going to have to deal with as they grapple with attracting investors back to the market. But I think in the long term, you can be slightly bullish because Trump is a businessman. He's pragmatic. And there are things that can be done from the Chinese side to assuage some of the issues that he cares most about. He cares about the reindustrialization of America, reshoring jobs, protecting American industries. And there are things that China can give up in an effort to appease that and to support that. And when they do, that can lead to a much more pragmatic dynamic in the relationship rather than what you face with the Democrats, which is a very intractable dynamic where there's a whole slew of issues that they care very much about that China will never be able to reconcile and overcome. And therefore, it just kind of draws on indefinitely as a kind of shell game.
Hey, Ben, one of the stories on the Bloomberg today, we talked about the Chinese 10-year yield dropping past the key psychological milestone of 2%. It was at a record low. Traders essentially kind of ramping up their bets that authorities would ease monetary policy further to bolster the weak economy. When you think about China, what is more important to making it more investable for investors? Is it the U.S.-China relationship? Is it China figuring out its real estate overhang, or is it something else?
The key number for us is consumer behavior in China, the key indicator. Everything else kind of is affected by that. So when geopolitics affects stock prices and valuations, they undercut people's home, kind of their savings, their portfolio, and therefore they consume less. And likewise, if real estate prices are falling and homes are going at lower prices than they were previously, again, that undercuts people's confidence in the market. And so all these measures to stabilize the property market, to assuage some of the geopolitical tensions, albeit very, very minute, are an effort to get the Chinese consumers back to the market. Because the only way that China grows and the way that it survives and the way that it performs the way people were hoping it would, several years ago, is to establish it as a domestic consumption market and enable it to absorb a lot of these products that they're exporting outward, because they simply cannot afford to continue to run trade deficits with every country, or trade surpluses, if you're sitting on the Chinese side, with every country around the world.
Ben, a few years ago, if we were talking to you, the conversation we'd be having is, China's going to overtake the U.S. as the largest economy in the world, and it's going to do that very soon. That narrative certainly has shifted, but do you think that does end up happening eventually?
I think the numbers would say it does. And just, again, the efficiency of the Chinese economy is still quite low. There's a lot more that can still be done to improve their efficiency. They are very well positioned in what I would call kind of the fifth industrial revolution, right? Or, with all the types of key hardware and even consumer-facing software that's really redefining the way we engage with technology. So mobile first, everything from entertainment, payments, commerce level, and then, of course, all of the leadership across electric vehicles, mobile handsets, et cetera. So my view is that China is well positioned for this new age, and particularly for digitally native consumers. But there are a lot of things that are undermining that. The anemic and population growth in China. I think the lack of turnover within the Chinese Central Party and changing regimes as they had historically, and just an overall kind of saturated economy are undermining, and a higher saturation than was previously, I think, or faster saturation than previously would have been predicted, is undermining the ability for that prophecy to come true quickly.
Hey, listen, I'm looking at the holdings, Ben, in your fund, Tencent, Xiaomi, PDD, Chip.com, some of them, BYD. How often are you buying, selling, moving these names around? How are you thinking about what you want to have in this portfolio?
Our view was that China was too dynamic a market to be passively traded. And so we thought one of our differentiators would be that we were active. And so that enables us to move in and out, particularly across share classes. So A shares, S shares, or A shares, the ADRs and the H shares. And we think that in this dynamic as well, you need to be moving in and out of those, because you're going to see that the ADRs get hit every now and again, but the mainland indexes are flying, retail buyers are pouring into those indices. So I do think that you've got to be active. And then what we're trying to do is position ourselves in that product for what we think will be the immediate knock-on effects of some of these stimulus policies, which will help improve some of the domestic consumption narratives. And so therefore, those consumer-facing names that we put at the top of the holdings will probably see benefit the fastest.
Ben, what stimulus policies do you think are forthcoming that we don't? What are you anticipating that we haven't heard about yet?
I don't know if I'd point to anything really specific. And I still think that a lot of the stimulus is more narrative than it is. It's kind of more form than function, in the sense that it's not truly having a material impact on the bottom line. The thing we're looking for is just that kind of sustained momentum that people within China and externally feel that the government is serious about growth, serious about cleaning out some of the bad debt, some of the things that it has under its control. And of course, the geopolitics are less under its control today than ever before. And that those would then almost kind of jumpstart, like sparking an engine for a spacecraft, but spark the engine of consumer growth, and that people would kind of return to the retail, return to high street, start spending a little bit more, because the money is there. I mean, the money's sitting there in those bank accounts, 21 trillion and counting of household savings in dollars, much more than is in the US. And so there's a huge potential to be unlocked, but people have to kind of feel that. And so I think they were holding back, kind of waiting for Trump, and hopefully you'll see more things coming out.
Hey, just got time for another question, one more question, 40 seconds or so left here. And going back to your holdings, I don't think I see TSM, Taiwan Semiconductor. Is there a reason why? Is it just too big or what? I mean, it's up to 87% this year.
We've moved in and out of it. And we even sometimes have had NVIDIA and some of the other companies that still have significant revenue coming out of China. But in this current turn of the portfolio, it's not there.
All right. Good to know. Good to know. So appreciate it. Ben, thank you so much. Go get some sleep. Ben Harburg.
Play some soccer, talk about some soccer. Wait, Ben. We have like 20 seconds. What's your team in Spain called?
It's called Cadiz. C-A-D-I-Z.
Oh, yeah.
We're
I've been to Cadiz.
Southern Spain about an hour.
I've been there.
Oh, it's glorious.
It's famous for sherry, right?
Put one plug in. We have sherry just next door, but some of the best food in the world, the oldest continuously inhabited city in Western Europe. Really? Our stadium is 150 meters from the beach. Just a glorious place for football.
Cool. Wait, so are you there for the sports, or are you just there for the view and the food and the...
Everything.
Yeah.
Everything.
All in. All right. Ben Harburg, founder and portfolio manager at Core Values Alpha, joining us from Riyadh on this Monday, December 2nd. All right, folks, we got about 26 minutes to go until the closing bell.
I'm thinking about Spain.
I want to look at this map
of the soccer teams,
where this place is.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, TikTok. We are about 19 minutes away from the closing bell, and we have seen the NASDAQ 100 just pretty much hovering near its highs of the session. So as we just heard, up about 242 points, so good for a gain of almost 1.2%. S&P just called it a little bit higher, but I do know that we've been hovering near some records throughout the days. We'll see whether or not we close at a record high. Did you close at highs on Friday?
We did.
I really kind of tuned out. Sorry.
So offended. It was
I did think about you. I did think about you while you were doing your duty here.
What do you say if thoughts and there's like a
ifs and buts for candy nuts, we'd all have fun at Christmas.
Oh, okay.
It's a friend of mine in college. She used to say it all the time.
Well, finally, we're getting to Christmas season.
We are.
Yeah, so now it's even more apt. Hey, no good segue here, but we always like to check in with Jimmy Lee. He's the founder and CEO over at the Wealth Consulting Group. They've got about $5 billion in assets under management. Usually he's in Las Vegas. Sometimes he graces us with his presence here at the Bloomberg Interactive Broker Studio in New York. Today he's in Costa Rica. Jimmy, what are you doing in Costa Rica?
I'm on a little personal vacation with some family, so enjoying the weather.
All right, well...
It's a beautiful place.
It is. I'm sorry that you're stuck in your hotel room Zooming with us. on this Monday afternoon. I hope we won't keep you for long and you can get back out there.
The best thing out there in Costa Rica, it's the food, it's the environment. They don't spend money on military. It's really cool. But the monkeys, right, that are in the trees. We used to all get up early and we called it monkey TV. We just sit there and watch the monkeys waking up.
Was on the beach this morning, Carol, and they were right above us, having fun, hanging out.
So
but
cute.
I would always go into my room to do your show. I love your show.
Okay. That's Jimmy saying, all right, guys, enough about Costa Rica. Can we talk about the markets? Where are we? Listen, I mean, by many accounts, certainly the U.S. equity trade is going to, unless something happens in this last month, it's going to be a pretty good year. What's your take? 2 good years now we've seen for stocks. Sometimes it's hard to keep that momentum going after 2 up years. What are you thinking about here in terms of what's the most investable part of the U.S. market? What is not?
Well, that's an interesting question. And as I've been on a guest on your show for a long time now, you know that I've been fairly bullish on equities for the last couple of years. And in a time frame where a lot of economists were just predicting a recession, primarily, I think, because of the data they were looking at historically suggested that we're going to face a recession, which hasn't occurred. Of course, tech stocks have led the way. The Max 7 have been a big part of the story on all the major indexes going up as much as they have. But recently, we've seen the market broaden out. The sectors that we've talked about that we're not participating are participating now, like financial sector, industrials. Small caps in terms of market cap are doing much better now. So across the board, you're seeing a lot of different areas participate. And I think recently that's because we've had so much money sitting on the sidelines. We still do. One of the things that we track on our investment committee weekly is the amount of cash going into ETFs and mutual funds, into equities, fixed income, and money markets. And, people keep putting money into cash, believe it or not. I think it's probably from a lot of the treasuries that are coming due and they're not sure what to do with it yet. But the people that want to participate, I think, they're looking for pockets of the market that are less expensive, like value stocks, like small cap stocks. And I do believe that those cyclical sectors are areas that we can invest into. I also think that bonds, now with the yields climbing back up as they did after the first rate cut, I think there's value in bonds too. So I think there's a few areas that investors could get value in.
Why do you think investors are still on the sidelines?
Well, Tim, I think it's just this uncertainty. And, I think a lot of people were fooled, that the 5% treasury was the best place to go. Now, again, we've talked about this before. For your money sitting in checking account deposits that were not earning any interest, that was a great move. But for people that took money out of stocks to put it into treasuries and money markets, I think we're just listening to the headline news and not paying attention to, maybe what the companies were doing that they're invested in terms of earnings. And for the most part, I think a lot of people that normal investors, not retail investors, not institutional investors, just don't pay enough attention to this. And so they look at the headline news and they hear about recession. And while the market's gone up a lot, for a lot of Americans, it hasn't felt that great because we've had a lot of inflation over the last couple of years. So I think the feeling of a bad economy kind of maybe overtook their investor behavior, which is always what we fight against as financial advisors. Is investors are always trying to put a lot of money at the tops and selling out when there's a little bit of panic.
Yeah, no, it's, I get it, right? We talk about that investor sentiment, so important. Ultimately, Jimmy, we're just kind of wrapping up an earnings season, but I think about, we go from earnings season to earnings season, but that is really kind of our gut check, right? Our transparency on really how companies are doing when it comes to growing the top line, expenses. Are they upbeat about spending in the new year? These are the important things that ultimately will determine whether or not investing in stocks makes sense, or at what valuation does it make sense.
Yes, and as you know, earnings have been pretty darn good, in the face of higher interest rates and all the different obstacles that we do have in the economy. And certainly there's a little bit of softness in a lot of the data that we've seen, whether it's manufacturing or even a little bit of softness in the employment data. But for the most part, I think post-election, people, are thinking that things are potentially more hopeful for next year as everybody's going to feel a little bit better when interest rates are lower. And if you think about the kind of interest payments that consumers make, so credit card payments, auto loans, mortgages, as rates come down, as the 10-year comes down, and those interest rates on those types of consumer debt comes down, I think people are going to start to feel a lot better. And I think that the jobs situation and employment situation is going to remain pretty strong. And so I'm very hopeful about next year, that we're going to be going into an environment with lower rates. I think consumer sentiment is going to get better. I think the C-suite of large companies and small companies can be a little more bullish about CapEx and where they're going to invest. And hopefully what we'll see is a soft landing, that the Fed actually does engineer a soft landing. I would absolutely love to see interest rates go lower. I don't think inflation is nearly the problem that the headline numbers suggest. If you look at how housing plays into the headline numbers, we know that real-time rents are lower. And so once it starts getting into the numbers, I think things will look better, and hopefully 2025 ends up being a good year. Yeah,
I feel like we've got to get into it and kind of get a good feel of the policies that might come from the administration and how that impacts the corporate environment, certainly for those publicly held entities. Jimmy, thank you so much. Really appreciate being able to check in with you. Happy New Year. If we don't get to you before the end of the year, I'll come back to you. Jimmy Lee, he's founder and chief executive officer at Wealth Consulting Group, joining us on this Monday in December from Costa Rica, where I'm assuming it's a little warmer.
Costa Rica? I don't know if it's warmer than Las Vegas.
What's the temperature?
I'm looking it up right now. It's, what it is? It's about 70 degrees there.
Yeah.
So it's kind of perfect.
It's kind of perfect.
Yeah.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.